What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 4 Mary Jane dividend stocks. I'm going to say Mary Jane. I don't want to be penalized or lose my monetization for this video. These are real estate investment trusts that I am buying. I want to know if you guys agree. These are high yield dividend stocks. I had many requests by either Twitter followers, Instagram followers, or YouTube subscribers. Hopefully you can, if you're new to this channel, make sure you subscribe, by the way, on real estate investment trusts that I'm buying. Now, I will only buy a Mary Jane dividend stock, a Mary Jane stock, if I get dividend income. When I put money in to a stock, I want a return. I want passive income. These guys generate a lot of passive income. Their revenue is doing pretty well. I'll go over the risk in each of them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these REITs out right now. First real estate investment trust I want to go over is Innovative Industrial Properties. Funny thing was, I actually did get a dividend on 420 one year with these guys. At their peak, they were 279.52, and now they're 112.32. So there is a dip right there. They were way overvalued, in my honest opinion. Again, this is not financial advice for entertainment purposes only, disclaimer in the description. But I'm going in for the kill. Their dividend yield is 6.28% right now, a PE ratio of 22.03. Again, FFO is more important with REITs. Average volume 292.87K. Market cap 3.21 billion US dollars. Year range is 87.47 to 268.49. So there's a major dip. Day range 114.36 to 117.32, and its previous close was 118.05. So what excites me about these guys? So they're a real estate investment trust in the Mary Jane industry. They're the first publicly traded company in the New York Stock Exchange to provide real estate capital to the regulated Mary Jane industry. I can't say the word or else I'll get in trouble. A real estate investment trust, remember, 90% of what they make go back to investors. So they have a portfolio. I will go over their portfolio real quick. The big thing is they focus on purchasing specialized industrial real estate assets for their regulated Mary Jane industry. They believe that their sale, leaseback, and other real estate solutions offer an attractive alternative to state licensed Mary Jane operators who have limited access to traditional financing alternatives. They have acquired and intend to continue to acquire regulated Mary Jane facilities in states that permit licensed Mary Jane operations. So I'm going to go over their portfolio. Every time I go on their website, they start getting bigger. So one of them, they're in Arizona. So here's their portfolio in Arizona. California, it's huge. Florida, they're getting in there. Illinois. I mean, they just start getting all these new ones. And it's really exciting. Every time I go on the website, I see like new facilities they acquire. Massachusetts, Michigan, Missouri, Nevada, New Jersey, New York, North Dakota. Ohio is starting to get bigger. Pennsylvania, Texas, Virginia, and Washington. These guys are going to continue to grow. And remember, if you are a real estate investment trust and things aren't going well, okay, say like this company that's growing, Mary Jane, they have to pay their landlord. What happens when you pay your landlord is, with being a real estate investment trust, 90% of what they make go back to shareholders like me and you, if you guys own innovative industrial properties. So in 2020, I bought a huge dip when the pandemic hit, and I sold them and threw them in other dividend stocks. Now I'm rebuying them. This is one that I'm going to be long-term on. It was just the point where I had to sell it. I couldn't keep up with M1 Finance. I couldn't really perfect a good strategy to put more money into innovative industrial properties. I couldn't keep up with the percentage. Now I have a 3% percentage on my M1 Finance dividend portfolio where I'm buying more fractional shares of these guys. And my high-yield REITs, which I'll go over after this one, which are Mary Jane REITs, which is exciting, they are going to be buying more shares for these guys. And I have a high percentage on those guys. which I'll go over at the end of this video. Now, let's check out their revenue and their dividend history. Now, this is called backing up your mouth. Put your money where your mouth is. This is a perfect example. The money is there, and it's backing up their mouth as being one of the best real estate investment trusts out there from what people say. So people say, oh, IIPR is not a good stock, the revenue. Right here, I have the revenue. This is in millions US dollars. 2016, 0.2, 2017, $6.42 millions US dollars. 2018, $14.78 millions US dollars. 2019, 44.66. 2021, 16.89. 2021, 204. Huge increase in revenue. When there's a huge increase in revenue, usually there are dividend hikes. Let's go over that. And check out this increase in dividend income. 2017, it was 15 cents. 2018, 25 cents. 2019, 35 cents to 45 cents in 2019. To 60 cents. 2019, 278 to 2020, $1, and then 2020, 106 to 117 to 124 in 2021 to 132, and then 2021, 140, then 2021, 150, and then 2022, 175 to 180. The payout ratio is 88%. That's high. These guys are a new kid on the block. That's one thing that could put them at a risk. Number of dividend increases in the last 5 years is 14. Dividend growth in 5 years is 58.57%. If you bought one share, you made $7.20 with a 6.10% dividend yield. Still a risk. If we go in a recession, which they claim we are not in a recession, are these guys challenged? Right now, I mean, when it comes to Mary Jane stocks, I like these type of stocks that distribute good dividend income. I want something out of it instead of just putting money in, Aurora, Mary Jane, or Tilray, or all these other companies that are Kronos, these other companies. Where's my dividend? An MJ ETF, I hate it. I don't like it. I'd rather invest in these guys and get something better out of it. Good dividend income. Let's jump to the next dividend stock. And this is a very specialized real estate investment trust. AFC Gamma, sitting at 1687. Dividend yield of 13.28%. Whoa! So let's look into that. The PE ratio is 8.12. FFO, remember, average volume 124.60K. Market cap 343.54 million US dollars. Year range is 1490 to 2321. Day range is 1656 to 1699. And its previous close was 1686. What makes these guys so special, and why do I keep on buying them? Let's check that out. So according to the website, they're the leading provider of institutional loans to high-quality Mary Jane operators nationwide in all aspects of production, cultivation, processing, and distribution. They offer loans and related facilities, generally secured by substantial assets such as real estate, licenses, and cash flow. Their years of combined lending expertise and real estate experience, AFC Gamma's principles are now focused on exponential growth in the Mary Jane industry. Now, there's a few other things I want to go over. So they invest in the development of Mary Jane-based therapies and consumer products that cannot be denied. However, while Mary Jane can be appealing investment, the federal landscape is uncertain from the regulatory standpoint. One of these times, I'm going to slip and actually say the word. Policies governing Mary Jane vary across country, and every state is different with regard to regulation, license requirement, and supply-demand dynamic. As a result of our rigorous diligence, not all operators qualify for financing. Potential investors, as well as companies in the Mary Jane space, deserve the highest quality when selecting an institutional lender. We believe that AFC Gamma stands out. Let's go over their revenue and their dividend history. So here's their recent revenue trends. This is in millions US dollars. 2020, 525, 2021, 3701. I'll even go over the most recent news. So here's their quarterly statements. Let's start in September 2021. Revenue was $9.96 million. It was up 524.29%. The operating expense was $3.85 million. That's up 265.78%. Net income is up. It was $7.93 million. It was up 276.53%. Net profit margin, that's kind of understandable, a little bit new. Then the revenue in December 2021 was 11.69. March revenue was 16.03 million. Operating expense 6.38 million. Everything's up. Net income 10.16 million. Net profit margin 63.39. Earnings per share 0.52. June revenue 18.31 million. Operating expense 5.79 million. Net income 11.35 million. Net profit margin 61.99. Earnings per share 0.57. Revenue is going up. September 2022 $17.60 million. Operating expense $5.31 million. Net income $11.48 million. Net profit margin 65.23. Earnings per share 0.57. So things are going up. That's what I like. I wouldn't be into these guys if the revenue wasn't going up. Now let's go over their dividend history. So here's their dividend history. They're new. So there's always a risk when investing in new dividend stocks, especially if they haven't been challenged. So right here, 2021, it was 38 cents. 2022 is 50 cents to 55 cents, and then 256 cents. So we'll see what happens with these guys. They're a high yield dividend stock. There's a risk, and we'll see what happens. Let's jump to the next dividend stock. Here's a new kid on the block as well. REIT, Chicago Atlantic Real Estate Finance Incorporated. So we'll go over that. It's at 1567. The dividend yield's 12%. Woo! PE ratio 7.51. Average volume 51.92K. Market cap 276.61 million US dollars. Its year range is 1387 to 2029. Day range is 1552 to 1611. Its previous close is 1588. Let's check these guys out. So Chicago Atlantic Real Estate Finance is a commercial real estate finance company that manages a diversified portfolio of real estate credit investments, primarily in the Mary Jane space, and is actively investing across the value chain. The company is led by a senior management team with extensive experience in real estate credit, direct lending, risk management, and real estate acquisitions and development. The demand for financing in the Mary Jane market is expected to continue to rise due to recent and future state legalization of Mary Jane for recreational and medical use, as well as increased consumer adoption, with both trends requiring significant capital expenditures by operators. At the same time, the federal prohibition on Mary Jane use and commercialization hampers certain commercial and financial activities. So, So let's check out their revenue and dividend history. So these guys are so new. Their revenue in millions US dollars was 11.07. So we need to do a little bit more in-depth research. Let's check that out. So here's a really interesting article that just came out. Chicago Atlantic grows Q3 revenue by 13%. So that's very attractive. So I'm going to read some things real quick. So, third quarter results, okay, right here, financial results. Net interest income of approximately $12.9 million, representing a sequential increase of 13.4%. Total expenses, approximately $2.9 million before provision for current expected credit losses, represented a decrease in 1.1%. Net income of approximately $9.8 million, or 0.55 per weighted average diluted per common share, represents a sequential increase of 31%. So adjusted distributable earnings of approximately $10.3 million, or 58 cents per weighted average diluted common share, representing a sequential increase of 16.0%. Book value per common share of $15.23 as of September 30th, 2022, compared to $15.13 as of June 30th, 2022. As of September 2022, the company had borrowed $53 million on its own $65 million secured credit facility, resulting in a leverage ratio of approximately 20%. So right here, there's an outlook. Okay, let's not even worry about that because you can have an outlook or prediction, but guess what? You need to have the numbers to back it up. So this is good news. Then their dividend is 47 cents per share to common stockholders as of record on September 30th, 2022. And now we're going to go to their dividend history. These guys are so new right now. The dividend yield right now, according to NASDAQ.com, is 11.84%. Annual dividend, if you bought one share, you made $188 per year. And in March 2022, you got a dividend of 40 cents. So originally, the first dividend was 26 cents to 40 cents to 47 cents. So we will see how things go with these guys. But I'm going to take the risk and invest in these guys. So these are cheap, high-yield dividend stocks. These are two of them that in the real estate sector. So let's go to the final dividend stock. In the final dividend stock, it's listed as the OTC markets. I had to go on E-Trade and take a little bit of a hit buying these guys because it's an OTC classification. NewLake Capital Partners, it's sitting at 1690. Dividend yield at 8.76%, a PE ratio of 19.03, average volume 18.19K, market cap 361.72 million US dollars. Its year range is 1270 to 3095, major dip. Day range was 1690 to 1730, and its previous close was 1708. So I did buy shares of these guys recently on my E-Trade dividend portfolio. So let's go over these guys. NewLake Capital Partners is the leading provider of real estate capital to state licensed Mary Jane operators. Founded in 2019, they're a triple net lease REIT that acquires industrial and retail properties through sale leaseback transactions, third-party purchases, and build-to-suit projects. Their tenants are some of the leading operators in the U.S. state-licensed Mary Jane industry, and they're a trusted partner in the real estate needs. So they have some stuff right here. They go over national platform, ability to scale with clients, institutional counterparty. So we're going to go over one to two more things. These guys are so new, so I'm going to go over a few things. So here's their revenue, quarterly financial statements. $9.04 million, it was up 122.24%. Net income was up 50.19%. That's December 2021. March, revenue was up 130.05%. Net income was up 243.39%. Net profit margin was way up 49.27%. Operating income 236.78%. Then revenue in June 2022 was up 10.5 million. Net income was up 37.25%. So right there, now net profit margin, big deal. These guys are new. I like the revenue and net income being up. So 58.72%. Net income was up 37.25%. Then in September 2022, the revenue was up 50.01%. The net income was up 141.38%. Net profit margin was up 60.91%. The operating income was up 143.29%, which was 6.71 million. So I like the way things are going with these guys. And I just did a recent video on these guys. And I'm very excited, to buy these guys. One more thing I'm going to go over is their dividend history. These guys are so new. It's hard to find out what's going to happen with these guys. And again, IIPR, NLCP, REIT, and AFC Gamma, these guys are all new. So here's the dividend history of NLCP, NewLake Capital Partners. 0.12, which is 12 cents. And 9/29 2021, 12/30 2021 was 31 cents, then 3/30 2022 was 33 cents. So these are my 4 dividend stocks / REITs that I am buying in the Mary Jane industry. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I had to stop before I even said anything to make sure I don't get penalized every time I say Mary Jane or have to say the other word. If you guys, again, got to hit that notification bell. You guys have been fantastic on this channel. I'm going to continue to review videos because I have a little bit more free time. You guys take care and have a good one.